5 Secrets to Beat the Stock Market. Welcome to our channel. Today, we're diving into a topic that's on the minds of many investors: how to beat the stock market. If you've ever felt overwhelmed by the complexities of investing or wondered how some people seem to consistently outperform the market, you're in the right place. In this video, we'll unveil 5 powerful secrets that can help you navigate the stock market with confidence and savvy. We'll start by exploring the importance of understanding market trends and how they can influence your investment decisions. Then, we'll share expert tips on risk management, because knowing when to hold and when to fold can make all the difference. Next, we'll discuss the value of diversification and how it can protect your portfolio from unexpected downturns. But that's not all. We'll also reveal the significance of staying informed and adapting your strategies based on current events. Finally, we'll wrap up with a game-changing mindset shift that can elevate your investing game. So, whether you're a seasoned investor or just starting out, stick around. By the end of this video, you'll have actionable insights that can set you on the path to stock market success. Let's get started. Secret number 1: understand market trends. Understanding market trends is crucial for making informed investment decisions. By analyzing these trends, you can identify whether the market is in a bullish, upward, or bearish, downward, phase, which can significantly impact your investment strategy. A bullish trend indicates rising prices, suggesting it might be a good time to buy, while a bearish trend signals falling prices, often prompting investors to sell or hold off on new purchases. To identify these trends, start by looking at price charts. Tools like moving averages, trend lines, and candlestick patterns can help you visualize market movements over time. Websites like TradingView and Yahoo Finance offer user-friendly interfaces for tracking these indicators. Additionally, consider using technical analysis tools that provide insights into market momentum and potential reversals. But remember, trends don't exist in a vacuum. Staying updated with financial news is essential. Economic reports, earnings announcements, and geopolitical events can all influence market trends. Subscribing to financial news outlets or following market analysts on social media can keep you informed about the latest developments. By honing your ability to analyze market trends and utilizing the right tools, you'll be better equipped to make strategic investment decisions. So, keep your eyes on the charts and your ears open to the news. Your future self will thank you. Secret number 2: diversify your portfolio. Diversification is one of the most effective strategies for reducing risk in your investment portfolio. By spreading your investments across various asset classes, you can protect yourself from the volatility of any single investment. This means not putting all your eggs in one basket. When considering diversification, think about different asset classes such as stocks, bonds, real estate, and commodities. For instance, a balanced portfolio might include a mix of large-cap stocks for growth, government bonds for stability, and real estate investment trusts, REITs, for income. This combination can help cushion your portfolio against market fluctuations. Another strategy is to diversify within asset classes. For example, instead of investing solely in technology stocks, consider including healthcare, consumer goods, and energy stocks. This way, if one sector underperforms, others may still thrive, helping to stabilize your overall returns. Before you start diversifying, it's essential to assess your risk tolerance. Are you comfortable with high-risk investments that could yield high returns? Or do you prefer a more conservative approach? Understanding your risk profile will guide you in selecting the right mix of assets for your portfolio. By embracing diversification, you're not just aiming for higher returns, you're also building a safety net that can help you weather market storms. So, take the time to evaluate your options and create a well-rounded investment strategy. Secret number 3: invest for the long term. When it comes to building wealth, investing for the long term often outshines short-term trading. One of the most compelling reasons for this is the power of compounding returns. When you invest your money, not only do you earn returns on your initial investment, but you also earn returns on the returns over time. This exponential growth can significantly increase your wealth, especially if you stay invested for several years or even decades. Consider the success stories of legendary investors like Warren Buffett, who famously advocates for long-term investing. Buffett's strategy of buying quality companies and holding them for the long haul has resulted in remarkable returns. His investment in Coca-Cola, for example, has yielded substantial profits over the years, demonstrating how patience can pay off. Long-term investing also allows you to ride out market volatility. While short-term traders may panic during market dips, long-term investors can remain focused on their goals, knowing that markets tend to recover over time. This approach requires discipline and a strong mindset, as it's easy to get swayed by daily market fluctuations. So, if you're looking to build lasting wealth, embrace the long-term perspective. Stay committed to your investment strategy, be patient, and let the power of compounding work in your favor. Remember, great things take time, and your future self will thank you for it. Secret number 4. Stay informed and educated. In the ever-evolving world of the stock market, continuous learning is key to staying ahead of the game. The more you know, the better equipped you are to make informed investment decisions. This journey of education doesn't have to be daunting. There are countless resources available to help you expand your knowledge. Start by diving into some highly recommended books, such as The Intelligent Investor by Benjamin Graham, which offers timeless wisdom on value investing, or A Random Walk Down Wall Street by Burton Malkiel, which provides insights into market efficiency. For those who prefer audio content, podcasts like Invest Like the Best and The Motley Fool Money Show feature expert interviews and discussions that can deepen your understanding of market trends. Additionally, consider enrolling in online courses from platforms like Coursera or Udemy, where you can learn at your own pace. Following market analysts and experts on social media can also keep you updated on the latest trends and insights. Engaging with their content can provide valuable perspectives that enhance your investment strategies. Lastly, don't underestimate the power of networking with other investors. Joining investment clubs or online forums allows you to share experiences, discuss strategies, and learn from one another. By staying informed and connected, you'll not only boost your confidence but also increase your chances of success in the stock market. So, keep learning and growing. Your investment journey is just beginning. Secret number 5. Manage emotions. Emotional decision-making can be one of the biggest obstacles to successful investing. When fear and greed take the reins, they can lead to impulsive choices that negatively impact your investment outcomes. For instance, during market downturns, fear may prompt you to sell off your assets at a loss, while the allure of quick gains can lead to risky investments during market highs. Recognizing these emotional pitfalls is the first step toward better investment decisions. To maintain a rational mindset, it's essential to develop strategies that help you stay grounded. One effective approach is to set clear investment goals and stick to them. This gives you a roadmap to follow, making it easier to resist the temptation to react emotionally to market fluctuations. Additionally, consider implementing a systematic investment plan, such as dollar-cost averaging, which allows you to invest a fixed amount regularly, regardless of market conditions. This strategy can help mitigate the impact of volatility and reduce emotional stress. Moreover, take time to reflect on your investment decisions. Journaling your thoughts and feelings about your investments can provide valuable insights into your emotional triggers. Lastly, remember that investing is a long-term journey. By developing a disciplined investment plan and focusing on your goals, you can navigate the emotional ups and downs of the market with confidence. Stay calm, stay focused, and let your strategy guide you to success. In today's video, we've uncovered 5 essential secrets to help you beat the stock market and enhance your investing journey. First, we discussed the importance of understanding market trends, which can guide your investment decisions and help you identify bullish and bearish phases. Next, we emphasize the significance of diversifying your portfolio to reduce risk and protect your investments from market volatility. We then highlighted the benefits of investing for the long term, showcasing how compounding returns can significantly grow your wealth over time. Following that, we stressed the necessity of staying informed and educated, recommending valuable resources like books, podcasts, and courses to keep your knowledge sharp. Finally, we tackled the emotional side of investing, encouraging you to manage your emotions and develop a disciplined investment plan. Applying these tips is crucial for achieving success in the stock market. Remember, investing is not just about making money, It's about making informed decisions and building a sustainable strategy for the future. If you found this video helpful, we'd love for you to engage with us. Please subscribe to our channel for more insightful content. Give us a thumbs up if you enjoyed the video, and share it with friends or family who might benefit from these tips. Together, let's navigate the stock market and work towards financial success. Thank you for watching.